Hey guys, it's been a while, so I just wanted to record a quick video on, especially on this pattern, that I see in MU, earlier in April, and I think it was a really good pattern to just kind of study and get a hold of because it's repeatable in the markets and it's something that always tends to happen in terms of consolidation and how stocks tend to trade. What I'm pointing at right now is basically the recent area of consolidation. So we had this pullback on a leading stock in the market, right? And that's where folks start to get very pessimistic and bearish and things of that nature. But what happened after the fact is what really caught my eye. So what I want to point at right here is this area on the charts where we had a pullback and then we get some rally where we reclaim the green line, which is the 10-day moving average, and then we reclaim the 10-week line as well at the same time. And really the true pattern here that developed on this particular chart was we had this 445 consolidation area, which we failed at. And if we carry that all the way over into right here, right? And it could be anywhere. These are just zones really. So this zone has been, trouble in the past. Again, another trouble in the past. It couldn't get past it. And then when you hit something for the third time, right? And then you consolidate right around that area, this is when it gets really, it catches your eye completely. And why is that? Because one, you see the volume down here. So we run into this area, and this area, right? And the volume right in this, let me draw that a little more properly. The volume right in this area, right? This volume, there's no sellers in the market at this point. And even though it looks like stalling price action, right? It doesn't actually, it's actually not stalling. We got big volume on April 14. We go back down, right? There's no sellers in the market. We come back into this area and nobody wants to sell here. Nobody wants to sell. Ideally, what we see is, hey, we rally into an area of resistance, right? And we get a big, whack to the downside on big volume, big volume, big volume, big volume. This is stalling action. Whereas we come right back into this area for the third time. Again, the third time is the important part in my opinion, right? One, we butt the head, doesn't, now we create resistance. We're creating resistance into this area. And we come up truly for the third time, right? Right into this. And when we come into it for the third time, there's no sellers in the market. And that is your setup right here on April 22, when it breaks out and the volume is bigger than the last few days as well. We see new folks coming into the market, and now this is where it gets easy, in my opinion. So what happens is we can go, basically for a run into this name from this area to this area. So 21-day run on this particular name, which equated to about 66% move in 13 bars over 19 days. And the beauty of it is it's all above this green line right here, which is the 10-day, and now it's coming back into the 10-day. So these are the type of moves that kind of set up. And what I'm trying to emphasize here is the concept and what happened right in this area right here is really key, because you're butting heads for the third time into this area, but the third time you do it, you don't get stalling volume or churn, but you just see there's nobody wants to sell, and then buyers show up, and when buyers show up, we go for a rally. So I hope that was helpful. I think it's one of the best patterns in the market when you get a volume dry up right around a base pivot, right, or a consolidation pivot, and it works out the way it did. Absolutely, it's part of the right theme and what's working in the market at the moment as well. And I really wanted to highlight this so that we can all learn from it together if you missed it, this particular move in your portfolio.